Welcome to the Mortgage Note Podcast. My name is Kimberley Haas. Today we are talking with Sundeep Mathur, Vice President of Fintech, and Sandeep Shivam, Associate Director of Fintech at Tavant. Maybe we could start with some introductions. Tell us a little bit about yourself.
I'm Sundeep Mathur. I've been in the lending technology space multiple decades now. I started out a lifetime ago at Freddie Mac, where I was part of the team that helped build out Loan Prospector, the original charter version of Loan Prospector back in '93. So I built the technology. I led the team that built the technology that housed the first mortgage scorecard at Freddie Mac. Moved out here to California, worked for Freddie Mac Bank, Washington Mutual, a bunch of other folks. My role at Tavant is really in our practice space where AI meets lending, right? How can we help our customers leverage AI in their lending process in a safe, compliant way? And so that's kind of where I reside, is in that intersection of AI and lending.
Yes, thank you. My name is Sandeep Shivam. I have close to 20 years of experience in technology, and most of my experience is with banks and financial institutions across multiple continents. I am with Tavant for the last 9 years and have always worked on product, touchless product per se. And I am the product manager for touchless experience here at Tavant. We basically look to enhance how we can simplify the mortgage process for all parties involved from experience point of view, and excited to be part of this conversation.
Yeah, I understand that today we are going to be talking a lot about the touchless products. I'd like to start with the automation platform first. If you could explain to our readers what your automation platform is and how widespread it is within industry.
You want to take that, Steve?
Oh, okay, sure. So our automation platform is primarily for underwriters, and the way we look to automate things in the sense that we would like to automate credit analysis, asset, income, collateral, and various other modules, and want to give a lot of time to underwriter, basically looking to do things when underwriter is at sleep. Borrower uploads the document, you get certain reports available late in the night, but system is already running and finishes that job for you as an underwriter. And by the time you come and look at the file, it saves a lot of time for you. And in mortgage world, system cannot take the decision. AI is not powered enough to take decisions due to regulatory constraints. So that's where system helps, providing all inputs to underwriter, which will help underwriter take quicker decision rather than spending 6 hours in a particular loan file. They can probably spend less than an hour to arrive at a conclusion and take decisions. So that's very much the automation platform. It is getting used by multiple lenders, close to a couple of dozen in various modules. And there are a couple of lenders who are using all modules of touchless automation. So it has great impact in terms of cost saving. I'll also quote one of our prospects. They asked us to measure the real value. And they just picked one module and looked at if you do things in a particular LOS and you do the same thing through our automation platform, he estimated it is saving $250,000 per month on just one particular module. So that's the kind of saving that we are looking at. And it was a mid-tier lender, not a very large lender.
But remember, our platform is got multiple kind of pieces to it. There's an experience layer. There's the automation layer that Sandeep described. There's a connectivity layer. And so we're really providing a set of componentized services that can really fit multiple needs of our customers. And so the automation layer is really where the heavy lifting is happening. It's where the highest cost savings are coming from. But there's also this experience layer that provides one platform for consumer, loan officer, broker to basically share information, improve the customer experience. And then there's a connectivity layer, as well as, remember, we've applied this to not just the origination side, which is, again, the biggest opportunity, but we've also applied it to the servicing space. So it's both origination and servicing.
Yeah, I was just going to ask about that, the expansion to the servicing space and what that looks like and what it means for the lenders that you're working with. I'm sure they're excited to see this come out.
Before you move there, just
Yeah.
one thing I wanted to add. As far as automation, you talked about, Sandeep provided a lot of details. Um, on automation, we are also looking to left shift this aspect. Many of things which underwriter would be doing, we are looking to left shift and see how things can get quicker. So when credit report comes in, credit analysis can be done. Loan officer or processor get involved, resolve everything, so that when we look to left shift these things, it basically reduces the cycle time of the loan. So that's another aspect. Although I talked about being primarily for underwriter, but it doesn't stop you from using it for loan officer, processor, and sometime in borrower experience as well.
That's a very important point. I've been in the industry a long time, and we've been trying to get underwriting early in the process, right? How can the borrower get a more binding decision earlier in the process? That's what DU was all about. That's what LP was all about. But now with AI applied judiciously, we're able to do that more effectively, right? We're able to take, for example, that Sundeep can show you, we are actually able to take, as the bank statements are sucked in, the AI is analyzing those bank statements and addressing concerns on the bank statements immediately with the borrower, right? All of it is controlled with the lender's policy, the lender's guidelines, the lender's constraints, right? The lender's safeguards, governance. But the point is the point of lift shifting, right? Moving that underwriting capability earlier and earlier in the process, reducing that cost, and giving the borrower certainty, giving the lender certainty, right? That's kind of where we're headed with it. So there's a big set of capabilities that are in production today, but with AI, the emerging space is shrinking that even further, left shifting as an extent.
Right. And so it sounds like, Sandeep, you're really starting the process with AI right from the get-go, right from when a person deposits their first bank statements. It's all being put through AI in order to help, like Sandeep said, the underwriter and reduce the amount of time they may have to spend on a file, going from, like he said, 6 hours down to 1 hour.
Yeah, I think the key thing to remember is, we see ourselves as mortgage technologists, right? We see ourselves as leveraging AI innovation or leveraging technology innovation, but within lending space. So we're very much aware of the constraints, governance or compliance constraints. So I think the way to look at what we're doing here is that, we're applying deterministic methods when we need greater control, and when we need flexibility, and when we know that we can leverage AI judiciously, safely, in a compliant way, we're bringing it into the equation. So we're very aware of how we use AI, observability, fairness, no disparate impact. And so the AI that we're building into our solutions are apply them judiciously. And that's the line that we're walking, but we're very aggressive about where we can use it, and but that's sort of the gist of where we're headed and kind of our mindset.
I'll just add to it. You said we are using AI from get-go. That's absolutely correct, and it is basically getting used. The agentic platform uses AI even before you have logged in or created an application. So just if you have to provide few information and get to understand if you pre-qualify for a certain scenario or not, AI is there to help you in the process. So our borrower experience, we have agents sitting on top of the platform, and we call this agent Maya. It can be named as lender needs, but this agent is always there helping with any clarification, any hesitation that borrower might have. So that agent is there to help borrower throughout the journey. Like in traditional way, loan officer will be there with borrower throughout the journey. So we have the platform which has AI capability from get-go, like you said.
Right. And so maybe you could walk us through the process of what it would look like if a lender approached you and maybe they have been sitting on the sidelines with AI and really haven't implemented much technology into their platforms. What would it look like to integrate your systems into theirs? What would they expect, and what kind of outcomes should they, I guess, get themselves ready for mentally? I think people have a lot of anxiety or maybe anticipation about using AI and layering on some of these tools to maybe some of the automation they already have. What are some words of advice you have for lenders out there who are looking at different systems and thinking about these things right now?
So maybe I can answer it more from an AI perspective, and
Yeah.
so you can answer it from a product perspective.
That would be
I
great.
think from an AI perspective, I think again, our number one focus is business value, right? These tools and technologies are so powerful and getting better and stronger every day. But we want to help customers apply them into the space where we can do it safely and still capture ROI, right? And so that's the most important piece is that, and every customer is kind of different, right? We're all wrestling with the same problems, but people are approaching them differently. So how I grow, how I reduce cost, how I stay compliant, every customer is different. And so what we try to do is to take a more customized approach, like, right? Help the customers, help the business users understand the value of AI. What is it good for? What can I do with this technology? What kind of constraints do I need to put around it? Help them to understand that. And then take it towards how do I identify those business processes where I can squeeze ROI. Identify those kinds of things, and then the next step of it is these proof of concept, right? Show me that AI can actually do this safely, and so we're doing a lot of that. We're working with customer, business user, understand the value of AI. What can AI do for me? Identify those business processes where they could actually get value, and then build proof of concept. Show them that we can actually do this, and in that process, we're also helping them to understand how to do it safely, how to build the observability and explainability into their solutions. When we're helping them to build, multi-agent solutions, how do we do that safely? How do we make sure that we have, we can actually sit across the table from our auditor and explain what the AI is doing? And so that's part of what we're focused on is find the right ROI and implement this technology safely in our industry. And so when you think about broader kind of services and opportunities across, lending, origination, compliance, we're looking at it from that perspective. And, Sandeep can certainly speak to, from a product perspective, as we roll out the product, how do we integrate it into?
Yeah, absolutely. From product point of view, I will give you some of the things like conversion rate improves. We have seen significant improvement with conversion rate. By that, what I mean is applications created to submitted, that improves significantly because you have agent helping throughout the process, so drop-offs reduces. So that's one aspect. Second is cycle time. We have noticed significant improvement with cycle time, even with our digital application without AI, and with AI, the cycle time reduces further. And also if you have automation sitting on top of it, then there is a significant improvement with cycle time. You have loan officers having more time to put efforts towards generating lead or putting their energy at the right place. So that's another aspect we have noticed. And also the funding rate, number of applications created to getting funded, that also improves because technology is there to help through the process and eliminate anything which may not move further at lead level. So these are some of the areas where we see improvements for lenders.
Right. So cycle time is a major one, I imagine, that catches the ears of lenders. And of course, ROI, everybody in business is always thinking about their returns on investments with these things. Tell us a little bit about how rapidly AI is moving in the mortgage space. Every time I sit down with a technologist, I'm just amazed of how quickly some of these products are moving. Things that I would imagine would have taken a year and a half or 2 years in development, I'm being told are much shorter times in development with that. Tell us a little bit about how rapidly things are moving when it comes to AI technology in the mortgage world, and what you look forward to when it comes to further development in 2026 in the future.
So I think that maybe one way to look at it is that what's happening is that you kind of get this period of small growth, and then you get this hockey stick, and then you get to another plateau, and then you get, it's moving in these steps. It's not this gradual. So what's happening is that, as technology, so when first these LLMs became popular, people started to use them and started to get comfortable with them, right? How can I use it to actually do the chat stuff, right? Ask it questions about my processes, my policies. So people started to use it in isolated ways to do those kinds of things, right? Prior to that, people were using it in isolated ways within software development. But then they got to a point where you had this almost critical mass where, within software development, for example, it was doing things reliably and consistently. And I was able to train my people on how to be able to leverage the technology, whether it's in requirements, architecture, design, development, testing. All of a sudden we went from, okay, I'm trying a bunch of things to, wow, it's working. And so everybody was using it to do software development, to do testing. And so we had this plateau where I was using it in silos. My business analysts were using it for requirements. My QE people were using it for testing. Architects were using it for documentation and architecture. DevOps was using it for. So everybody was in these silos. But then we reached a plateau. Then we got to this next point where people realized that I could string these things together. I can take the output from requirements and feed it into testing. I can take the output from architecture, feed it into code gen. And so now then we achieved another level where people are now doing all of this stuff in a sequence. We have a solution that we offer as an accelerator for transformation. So literally, if you have this 25-year-old COBOL system, our solution, our accelerator can basically look at that COBOL code and using behavioral driven design actually generate .NET. And so it works, right? I mean, it's
Wow.
not no humanless, right? The output that's created, you want the humans to review it and bless it, right? But it's rapid. And so again, we went from a plateau where everybody's using it in silos to now this new benchmark where we can string these things together, and we'll experience the same thing on the business side, right? Everybody was trying this little chat GPT, the chat thing where you can talk to it and answer questions about my policies and stuff. Well, now we've reached another, so everybody's got something like that, right? Now we're reaching another plateau where we're taking not just that knowledge, that AI piece, but we're actually integrating it with email. We're getting pricing questions. We're doing so much more with it, and even that is now getting stabilized, right? People are. I get a request from a broker about, will you do this scenario? And so, the account execs get hundreds of emails like this, and they respond to them and they'll answer the question. But the bank that we're talking to, they lose track of the fact that these emails came in. And the account exec is so busy, he's not able to follow up with all of them. So now we're taking that and saying, okay, let's grab that. We can automate the answering of the question, right? Because that was the chat part. We can integrate with your pricing engine, your policy documentation. We can craft an email response. Well, we can also now shove that into the CRM. And so now you're at another plateau where it's no longer talking. You're not chatting with the AI. you're either having a conversation with it, or it's already integrated into your Teams, into your Slack, into your email processes, and it's doing more automation for you automatically. And as a lender, as a bank, you're able to do more with that information. So I think that's the way that I see it, is that you're kind of going through these plateaus and then these rapid hockey sticks where if you don't catch those hockey sticks, that's where you could find yourself, further behind. And that's where we're kind of asking folks to, it's changing so fast. You've got to sort of stay engaged and, keep trying, and then look for the opportunities to get ROI, right? Look for the opportunity to actually squeeze value out of the technology within your organization.
Right.
And I'll just add from lenders' point of view, when I talk to lenders who are into the business since late 1980s or 90s, what they say is cycle time used to be 40 days or something like that. Even today, it's like that only, in spite of having so much of technological revolution, which in a way it's true. And AI has that potential to shatter that thing, which with technological advancement also we are not able to reduce the cycle time significantly. So that's one potential. I see AI as a technology which is in line with computer, internet, smartphone and cloud, which has changed the way mankind has lived on this planet. And certainly on mortgage space, it has great potential to change the things the way we have been doing. Technology is innovating every day by day. It is changing. Earlier we started with chatbot. Now we have MCP, so we have agent on top of it. We have agentic solution nowadays where multiple agent works together to give the desired output. Then you also have RAG behind the scenes. So all these comes together, and as it is evolving, I feel like there is a lot AI has to offer to mortgage industry, where we reach to a stage where borrowers, if they wish to buy a particular home and they go and visit, in a day or two, they should be able to have that home. Today, it's not possible. Regulations also do not allow you, but technology has to prove to regulators that we are good enough to make it happen. Like if you want to buy a car, it can be done in a day. But if you want to buy a house, regulations itself will not allow you to make it happen in 10 days. So if we prove as a technology that we can make it happen, then regulators will also be flexible. So all I'm trying to say, AI has that potential to change the way we have done mortgage in the United States.
Yeah, I think you really hit the nail on the head there. I think regulations will change once the technology is there and the safeguards are proven. A lot of these regulations were put into place because of concerns about the American public, so rightfully so, but it was a different time period, and I think technology has really changed the game. But again, like you said, it's important that the regulators understand all of that as well before they go in and make any major changes. So as we wrap up here, I know I've been doing a lot of, asking of the questions, so to say. Is there anything that we haven't talked about that you want to make sure you bring up during the course of this conversation?
There is one thing I just want to highlight. We didn't touch a lot on servicing side. Sundeep did talk about that we have borrower servicing experience as well. And we have put Agent Maya on top of servicing platform. Behind the scene, you have multiple agents working to provide inputs to a customer facing agent. That is really significant because we have automated use cases which leads to high volume of calls to the call center. And once I was talking to one of the executives from a servicing firm, and the gentleman was telling me that every call to customer services cost him $14. Imagine agent paying on that platform and it's able to reduce those calls significantly. So on servicing side also, we have enhanced our platform to bring agentic capability, and that basically helps servicers to optimize their cost.
Yeah. I'm interested in how that it really proves to be successful for servicers? Because it's my understanding that that's pretty new, right? The servicing side of it with the agentic AI.
Absolutely, absolutely. Because we have MCPs available now with LLMs, it allows us to have an agentic capability with horizontal LLMs behind the scene, and that is what helped us to build agent on top of servicing platform on borrower side. Behind the scene, it is APIs and all, but it has logic and rationale to get to the right point to give right answer to the borrower to resolve his or her concern.
Yeah, and time is really of the essence when it comes to servicing. You really want to make sure that you're working with those customers because they are reaching out, and that's a major point of pain and conflict for a lot of companies is just getting people to reach out. So you want to make sure that they're being pointed in the right direction and they're getting their questions answered properly and promptly so they don't become frustrated with the servicer themselves, instead of just the particular situation that the servicer wants to help them out of at the end of the day.
I think that one of the things that I would add to this closing is right. So again, we've all talked about how powerful AI is, and every industry is trying to figure out how do I use AI within my world, and I think I would ask our business people to also similarly be inquisitive, right? That this is going to, as Sandeep said earlier, is going to have the opportunity to change, radically change how we originate loans and how we support our borrowers, right? I think our business folks need to start to get comfortable. Like the technology folks are more comfortable, right? They're using AI in software development and testing, all that. Our business people need to get similarly comfortable that it can actually have a very large impact on growth, on cost savings, on regulatory compliance, and that they should look for these opportunities, right? Hunt for these opportunities within their organization, right? And the reason that they should start is that it's a cultural change, right? This is not like regular software where you're going to hand this off to some developer and he'll go off and crank some code out. This is going to change how our business process works. And the sooner the compliance team, the legal team, sales team, operations, servicing, everybody starts to get comfortable with the technology and hunt for the opportunities within their own business processes where they can get value. The sooner they start that process, the sooner they'll be that the organization will be able to capture value. And then, and I think the other point is just that you're talking about the regulators, and I think the other side of that is that everybody has to experiment, everybody has to try things out. It's only when you apply these technologies into something you're passionate about does it start to click. You question whether it's going to work for you until you do it on something that you're an expert at. When you're an expert in sales, or you're an expert in servicing, you're an expert in compliance, when you use the technology in your own space, you start to see how powerful it is, and how much value it can add. And again, we don't, this isn't a matter of what's going to just eliminate people. I don't think that's what's going to happen. What's going to happen is it will increase productivity, and then that productivity creates opportunities for growth. And every CEO I know wants growth. They're not looking to cash in. They're looking to grow. And if the productivity from the technology can help you, grow, do more with less, I think that's what people want to do. They want to grow. And so that's what I would just say is that I think the experimentation with AI is absolutely critical for the company, the culture in the organization to change. And then hunt for those opportunities, business value opportunities.
I think that it isn't a matter of people thinking anymore that this is going to necessarily replace people, because you then have to have somebody to monitor the AI. So there's always, the different parts of technology, but if productivity grows exponentially as a result of AI, you see the value instantaneously. And I know that I've recently talked to some college kids that are learning all about AI in their majors, their respective majors in colleges. So I think that the younger generation is really wrapping their head not only around the technology and how they'll use it, but the ethics of it as well. So I have great faith in the young people who will be someday our business leaders and will have spent their entire careers using this particular tool.
Yeah, no, I absolutely agree. I give you an example that if today I'm going to start a mortgage company and I need, 10 compliance people, and if I'm able to use AI to, I only need 5 compliance people, there's going to be more entrepreneurs, more people that will come up with better, innovative ideas. And so you'll have an expansion. You won't have a contraction because you're going to have all these people coming up with new ways to leverage the technology. And, you don't have to look very far, right? We didn't have smartphones. There's no such thing as Uber, right? You couldn't have Uber without the smartphone. So, it's the same thing, right? As the technology gets better and more institutionalized, we're going to have all these really smart people come up with more innovative ways and to do things safely. And we're going to, I think, have an expansion of market share, expansion of homeownership, expansion of how do we educate the borrower, enabling the borrowers. So I think that is what's coming. So.
Awesome. Well, thank you so much for your time today, Sundeep and Sandeep. We really, really appreciate it. And thank you, all of you at home that were listening to today's podcast. Once again, my name is Kimberley Haas. Have a great day.